think, it looks like we're off to another good start this morning. One would have to conclude that this last week of trading in Tesla stock, my analysis from yesterday is probably correct. The stock was way too battered down after that rescheduling of the robotaxi reveal from 8.8 to 10.10, and some other things in the market generally, the macro pushing it down under 200. This was probably what was really good was probably a very good opportunity for you to have bought more. So hopefully you did, because right now you'd be a very, very happy investor. Anyway, the current move is looking more and more like the market moving back to where we were on July 9th at around 265. And it might take all the way to 10.10 to get there, but probably not. And I would consider that to be my expectation of the high watermark between now and 10.10. Of course, news could change that, and I could be completely wrong. But anyway, there you go. All right, I'm going to take a little sidetrack here for just a second. This channel was set up, was created, is designed to talk about Tesla and Tesla stock and how it is impacted more broadly by the broader economy and by the macro in the stock market. If that's why you're here, you picked the right place to be, because that's what we do here. So I think it would be a complete failure on my part to not start out this morning talking about the fundamental misunderstanding of business, of markets, and of the current economy by Kamala Harris. Kamala Harris, that could change the foundational principles of the U.S. governing system and undermine capitalism. As noted by pretty much everyone, from the pundits to the Fed, inflation is now moving towards a 2% goal set by the Fed. And while that trend is choppy, and it might not ever get there, I think it will, and I think it'll go below there, the idea that the government should have any hand in establishing fair prices or margins or profits is nonsense. They don't even do this in China or Russia. In the United States, we tried it under Nixon and under Ford with emergency situations at hand, and it was a miserable flop both times. This is a Marxist approach that doesn't work even in communist countries, and it's been proven to be it's over and over again a failure when there's top-down management of the economy. The Russians tried it from 1918 until the 1980s, and then Russia switched to a capitalist approach. China also found that they had to have some form of capitalism in order to improve the lives of their citizens. Inflation is not caused by companies gouging. It's nonsense. It's idiocy. It's caused by too much fiat currency in the system and can only be fully corrected by reducing the overspending of government or increasing productivity. Price controls would have the opposite effect, decreasing productivity. So you do with this information what you like. In my opinion, Harris is proving what I've been saying. She's incompetent, dumb, and far, far left. This is from Barron's this morning. Switching back to Tesla news, the stock, meaning Tesla, closed above its 50-day moving average for the first time in a couple of weeks. Breaking through moving averages can be a good sign for traders, making it a good time to check in with the technical market analysts. The downtrend line from the 2021 highs extends down to $220 a share, says Cap Thesis founder and market technician Frank Capillari. That level represents some resistance for Tesla stock. If shares can get above 220, they could run all the way to about 270. I say 265, says Capillari. That would be a new resistance should the stock successfully puncture that downtrend line. From Investors Business Daily, they go on to say Tesla's stock leapt 6.3% yesterday to 214.14. It regained the 21-day, 50-day, and 200-day lines. Shares cleared a very steep downtrend as well. Investors could use Thursday's move as an aggressive entry into Tesla stock. But if you covered up the stock ticker, investors might choose to look for better-looking charts and stronger fundamentals. Well, nonsense to you guys. If you want stronger fundamentals, you're not going to find them anywhere. There is no company that is currently got a stronger upward potential of much higher. Nothing even comes close to the potential of Tesla with robotics. This is Randy Kirk. Hit like, hit subscribe, hit notify, go down and, well, why do you want to hit notify? I know you always, if you don't, do you hit notify? I mean, have you hit that subscription button and then hit the notify button? Because then you get a heads up when my program comes out in the morning. You'll get a heads up later today. I'm not sure what I'm going to do midday today. I think I'm going to be looking at the upcoming price targets, but I'm not sure. And then tonight we do have Larry Goldberg, that we know for sure. And then, of course, you could join Patreon. You could hit me up with a little bit of additional revenue to support this channel. From Reuters, we have this: U.S. single-family home building fell sharply in July. U.S. single-family home building fell sharply in July as higher mortgage rates and house prices kept prospective buyers on the sidelines, suggesting that the housing market remains depressed at the start of the third quarter. Single-family housing starts, which account for the bulk of home building, tumbled 14.1% to a seasonally adjusted annual rate of 851,000 units. This is from the Commerce Department Census Bureau on Thursday. Home building has now declined for 5 straight months. This is not helping to get housing prices back in line. But we need the Fed to cut. The Fed should have cut. They should have never gone as high as they did. They should cut, but they aren't. Single-family housing starts dropped 14.8 on a year-over-year basis in July. The housing market has stepped down following the spring resurgence in mortgage rates. Residential investment, which includes home building, contracted in the second quarter after rising for 3 consecutive quarters. By the way, let me go back and say something. Mortgage rates are not determined by the Fed rate. It's indicative. There's a good, you can see a comparison chart and see that it moves in general with Fed rates. No, it's about Treasury rates, and that's even not an exact way to look at it, but it's pretty good. If you look at the 10-year Treasuries and you compare those to the mortgage rates, that'll give you a very good idea of where the trend lines are going. By the way, as I've mentioned many times before, I've written a book, 2 books actually, on real estate. One of those I wrote as a ghostwriter for my friend Bill Rayman, who is an amazing mortgage lender, and his information is down below. And he is my client, but he doesn't pay me to talk about him. But this is a really good time to give him a call. His information down below, Bill Rayman. All right, new construction has been buoyed by the dearth of previously owned homes for sale, but the stock of existing homes has also risen from historic lows. The average rate on the 30-year fixed rate has gone down now to 6.45 from a peak of 7.22 in May. And you can get into the 5s even on jumbos. Believe it, that's possible. You can actually get into the 5s. A National Association of Home Builders survey on Thursday showed home builders sentiment fell to an 8-month low in August. Builders blamed challenging housing affordability conditions for the 4th straight monthly drop in their confidence. And then permits for future construction of single-family homes slipped 0.1% to a rate of 938,000 units. Very, very, very bad news for the housing, and more evidence that we're already in a recession. Housing itself is over 10% of the overall market, and it has been a recession for a while. Here's a really interesting column this morning from James McIntosh of the Wall Street Journal. He says, long-term investors frequently cite CAPE, K-A-P-E, Yale professor Robert Shiller's cyclically adjusted price earnings measure as a way to take a look at whether the S&P is overpriced. At 35 times the average of past decades' earnings, adjusted for inflation, the S&P 500 is the 3rd most expensive since the 19th century and pricier than it was at 1929 highs. The obvious conclusion is that the S&P is wildly expensive and that the biggest stocks are even more so. That's one indicator. It's something to pay attention to. The Fed model named by strategist Ed Yardeni in the late 1990s, there's a separate one, attempts to compare stocks with bonds by comparing the earnings yield or earnings per share divided by the price. It is widely used to work out whether stocks are expensive or cheap compared with the safer alternative treasuries. At the moment, the Fed model, it's called the Fed model, suggests that they're very expensive indeed. Stocks are expensive. They were more expensive a month ago, before the 10-year yields fell sharply, but they're still expensive. He goes on to offer counter arguments in this article. He says, look, this may not be true for today. It might be a different market. It might be different times, but that they're worth looking at as you evaluate the market. And Randy's first rule is when something gets way out there too far, it's gonna correct. And it can be to the down low or to the up high. Ben Graham was talking about individual stocks and bonds when he said, this was a very smart ending thing to look at. I think it's worth listening to carefully. Ben Graham was talking about individual stocks and bonds when he said the margin of safety is the secret of sound investing, and he distilled it into 3 words. But the principle applies to the market as a whole. Buy when valuations offer no margin of safety, and you shouldn't be surprised when your portfolio doesn't do particularly well. Right now, there's not much margin of safety, but not investment advice. Tesla stock, huge margin of safety, unlikely to go below the recent low, and very likely to go much higher than its all-time high. Okay, this is breaking. The University of Michigan consumer sentiment for the U.S. rose, yay, to 67.8 in August 2024, up from 66.4 in July, and above forecasts of 66.9. Consumer confidence in the United States averaged 85.31 from 52 until 2024. Reaching an all-time high of 111.4 in January of 2000, and a record low of 50 in June of 2022. So what we're saying here is directionally, we should be very, very happy that it went up slightly. But when you're talking about the consumer sentiment sitting at 67.8 compared to an average of 85.3 and an all-time high of 111, no, this is not good at all. I think the consumer is in trouble, is unhappy, is not confident, and it's not good. And that's what I've been saying for a while now. Well, so how are the markets digesting all of this information this morning? Let's take a look. We have got the NASDAQ finally popping into green, probably helped by Tesla, because Tesla is up $5.06 right now. Google's also up. NVIDIA is up slightly, but the rest of them are down. In fact, Meta is down 7, Microsoft down 2.43, Apple down a nickel. So basically, you got a mixed Magnificent 7. You've got the Cathie Woods. You got the Cathie Woods also mixed, some up, some down. So, and the market is kind of, flattish also. Let's take a look at this. You got the Dow Jones down 42, NASDAQ up 2371. You got the S&P up 188. So that's directionally, everything is moving nicely up right now. Percentage-wise, you're looking at the Dow down 0.1, NASDAQ up 0.12, S&P up 0.03, and Tesla up 1.81, but it has topped off now. It was over $5 and it's now down, and now only up $3.88, but completely outperforming the market all morning so far, giving more evidence to my comments that I think we're going to be seeing FOMO between now and 10:10. All right, let's go ahead and take a look at the bonds. This morning, we've got the 10-year down 1.7 basis points, correcting some of that up move yesterday. You've got the 2-year only up 0.5 basis points. So that is spreading that even further out. It's driving me nuts here. 9, 6, 9, and 10, 19 now. 19 point spread between the 10-year and the 2-year. 19 basis points. I don't know. I just keep saying I don't know every morning. And the 2-month is actually up 1.5 basis points, spreading that even further as well. Yeah, okay. Let's go on to oil. The oil down $1.47 in Texas Intermediate to 76.69. I think that is a recent low, or very near a recent low. Brent back under 80 at 79.72. And natural gas, after several days of very strong upward movements, down 2.73% this morning to $2.13. I looked it up yesterday. What's going on with natural gas? General, weather, a little hotter than usual, using up more natural gas, inventory corrections, et cetera, et cetera. But there was really nothing that was specific to drive the price up. And apparently it got up a little too high, and now it's down 2.73% in the morning here. All right, we've got gold up $34. This is probably an all-time high of 2,526. Let me go ahead and check that just to let you know. Yes, that is an all-time high, 2,526 and 60 cents on gold. We've got silver up 0.13, 28.46. We've got copper down this morning a little bit, 0.78 at $4.12, but still, above that $4 level. All right, we have got the yen down, up, the dollar's up 0.77 on that one. And the dollar is, I'm sorry, that is incorrect. Reverse that. The dollar is down against the yen. You have to be able to, anyway, the dollar is down against the yen by that same amount, 0.77%, and it's up against the euro by 0.15. Bitcoin up this morning, 1,041, but only back up to 58,155. All right, there you go. So that's where markets are right now. Going back to Tesla, moving back up again, $4.33. Yeah, I don't know. I think Tesla will. Yesterday I got it right. The day before I got it right. Tesla is probably going to be in the green all day today, and probably, I don't know. Who knows? I think it'll stay in the green all day. How's that? Yeah, don't forget that there will be a program around 11 o'clock this morning. I might actually take the time to examine my price targets for pre-1010, for post-1010, and specifically for when robotaxis become a real thing. End of the year, my expectations of when I think all that's going to happen. Yeah, I might just kind of do a project my nonsense predictions because, like Brian White, I have been gifted with a crystal ball, badly broken one, but nevertheless. Okay, and then Larry Goldberg on later tonight. And that's all I've got for you right now, but it's been great. Oh, wait a minute. Yesterday, of course, I did a CERN basher, and you should go look at that. I'll put that card right up there. And now I'll say ta-ta, and it's been great talking to you.